9 a.m. in Shanghai, Shenzhen, and here in Hong Kong. You're watching The China Show. I'm Yvonne Man with David Ingles.
We are counting down to the open of markets in Greater China. Our top stories today, Asian stocks inching up ever so slightly. A cooler than expected U.S. inflation data failing to move the needle on Fed rate cuts, at least for this month. Now, election speculation boosting Japanese stocks and pushing the yen deeper into intervention territory.
Global central banks and former officials circle the wagons around Jay Powell in response to Trump administration's attacks, and they say threaten to undermine Fed independence.
And we'll take a closer look at China's biotech sector, hearing from companies driving innovation in cancer treatments, weight loss, and also beyond. Good morning once again. Welcome to the program. Lots to get into over the next 2 hours or so. The pattern across markets is, I'll just make this very simple. Apart from Japan, to a lesser extent, the big move up in oil, nothing much else is happening. We're trading sideways across most equity benchmarks, as you can see, although that could change once we get into the Chinese market, which has some idiosyncratic factors pushing that to the upside. Trade numbers are coming out today. We'll get to the election boost. We're still seeing present tense in Japan, 1.3% yields are pushing substantially higher in the JGB market. In fact, I think we're now down, counting today, should be 8 straight days of weakness. Flip the page, please, in the JGB market, which is the longest losing streak going back to 2024. Oil is paring back after what was quite a big-ish pop that we had. Shanghai crude, as you can see, is reflecting that move that we had in Brent going into the cutoff this morning. Silver futures are pushing, yes, $90. That's where we are. 95,000 in Bitcoin. Dollar story is one where it was a weaker CPI print. It wasn't weak enough to weaken the shackles of any expectations around the Fed holding this month. The yen, as you can see, is, yes, 115, and we've taken that out, maybe 160. Speaking of nice round numbers in the currency markets, dollar honky, so the Hong Kong dollar's not trading on the weaker side of the band. 780, there we go, north of that level. And nothing much to tell you about as far as futures go. 2-month highs, though, as far as the Hang Seng China index as well. So we'll talk more about that later on, of course.
Yeah, and certainly the China rally is still front and center. You're starting to see even global investors turn more positive around this equity story here, whether it is because of the renminbi strength that we've seen that can continue to charge flows or whatnot, but really just on the betting of valuations are still looking cheap on the whole AI story and the like. So there's still legs in this, it seems, right now. At a time when we continue to see, right, this volatility, I guess you could call it, when it comes to rates and the Fed discussion, and certainly we continue to see long-end rates melting up or at least catching up here, not just about Japan, but really about what's going on with the Fed, too.
I mean, it does add to the premium in U.S. assets, right, particularly when you look at fixed income. And, we were just talking about this yesterday. The cleaner play is EM, is Asia. Japan obviously has a different set of factors there. Korea is the AI play. China was only missing the earnings story, but that's starting to come together, right? So when that comes together, then you certainly have more stars aligned as far as the Chinese market goes. Just a statistic, the 3.6 trillion was the turnover north of that yesterday.
Another record.
It topped the 3.5 trillion the day before. So we'll watch that closely today. Trade numbers are coming out of China. Now, speaking of data, the U.S. CPI print did affect markets somewhat. It wasn't big enough to move the needle on the Fed, though.
Relatively benign, which I think was a bit of relief for the doves out there that are still expecting 2 rate cuts this year. Certainly that doesn't really do much in terms of the, as you say, the calculus there, but certainly is that more important, or really what's going on, the drama that you're seeing politically around the Fed. But it's interesting, right? When you hear the bullish core or the chorus of central bank governors that are really chiming in on this whole DOJ criminal investigation into Powell, and you start to see it, right? I saw it on my Instagram, really, instantly, on the ECB Instagram page. But we can pull up the statement from, it's not just from the ECB, right? It's also this joint statement that comes through from the Bank of Canada, from, I believe there's another one here. BOJ was not part of it, interesting enough. But it's rare to see that solidarity really from these global central bankers here.
Yeah, I mean,
BOE, I should say. That's the one I missed.
You're right. There's very little In fact, this probably is the only major issue that they could all agree on, which is how important independence is of the central bank. And
Jamie Dimon also.
I was
right?
about to say, yeah, it's not just central bankers, right? It's big bank bosses are coming out, and of course he's ruffled some feathers as far as his comments and what the U.S. president then said about his comments on that as well. And I think what Jamie Dimon said, and obviously there's the J.P. Morgan earnings, not to confuse that too, was that this might actually backfire and lead to higher inflation and higher interest rates. Yeah, this is what he had to say, of course. In fact, we heard not just from President Trump, not just from what we just talked about there, but also current and former central bankers amid, of course, the DOJ's investigation into the Fed.
He's billions of dollars over budget, so he either is incompetent or he's crooked. I don't know what he is, but he doesn't do a very good job.
It's still not a slam dunk, even with the new Fed chair, that rates actually decline, particularly if the administration jawboning and potential legal challenges raise concerns about Federal Reserve independence and make some of the voting members want to be sure that the economic conditions justify a move.
When there's attempts to unduly influence monetary policy decisions, when those are successful, those often lead to very unfortunate economic outcomes, including economic instability and high inflation.
When you talk to members of Congress on both sides of the aisle, they understand this. They may have different rhetoric out in public, but you talk to them one-on-one, they understand how critical the Federal Reserve is, and they are going to push back. That's where I'm an optimist. I don't think they'll let this happen.
For more, let's bring in Derek Wallbank, our senior editor, joining us from San Francisco. It seems like the support and the voices that are really rallying behind Jay Powell seem to be growing in some way. Derek, what do we have to watch out for next?
Well, they are. And you mentioned quite rightly, I think, that very notable letter from a whole bunch of central bank governors. The ECB, the Bank of England, the Reichsbank, the Swiss National Bank, the RBA, the RBNZ, the Norges Bank, Bank of Canada, et cetera, et cetera, et cetera. Getting them all together on something like this is certainly very notable. I'm not sure that Donald Trump is very interested in what, the governor of the Reichsbank thinks about anything. Let's be very clear. But having all of these folks together to really sort of send that signal, and it's one you really are hearing, I think, from across Wall Street. Jamie Dimon, the latest in the big names, but we've heard from a lot of commentators who are really kind of wary of the road that we're starting to go down here and the amount of heaping pressure that is on Jay Powell. Certainly, I think the idea of grand jury subpoenas coming to the Federal Reserve has taken this up a notch. It's been very clear that Donald Trump believes that he has the right to say whatever he wants to about what the Fed ought to do about interest rates. He has the right to say whatever he wants to about Jay Powell's job, what he's done, the pathways, and all of these other things. Right? That's been very clear. But you start taking legal action into there, and that brings this up into a different notch, into a different level. And certainly, I think the subpoenas have unnerved some people, and we've already started to see a little bit of kind of blipping in markets, even though that's kind of leveled off reasonably quickly. You can see a little bit of unease there. I do think that when I start this remark and I say I don't think he's listening to them, let me tell you who I think he will be listening to, and that is the voices of fellow Republicans in Congress, some of whom have been quite critical and suggested that there could be consequences if there is seen to be a major move against the Fed's bedrock independence, not least of which that Trump could have difficulty, even in a Republican Senate, getting his own Fed nominees through. And of course, that is a little bit of cutting one's nose off to spite one's face.
Yeah, and Derek, I just thought about it. The U.S. president listens to the markets. He arguably, from this time last year, he listens more to the bond market than he does to the equity market. And he also, I guess in some ways, looking at some of the moves recently from the White House, whether that's capping things like mortgage rates or credit card debt, he cares about inflation, given it is, of course, an election year. if inflation does start to pick up, if Jamie Dimon is right that this might lead to higher rates, might that change the tune coming out of the U.S. president?
Well, David, I think you've hit on something there, and I think you have to look at a lot of the way that the White House is framing a lot of things in this part of the second administration. Right, you're in a midterm election year. The midterms are at the start of November, right? And the general consensus in Washington right now is that the midterms are going to be fought over this issue of affordability. Can voters in the United States who feel pressure in their pockets, and bear in mind that is a group that Donald Trump credits in part with his presidency, right? Those are voters that he has been able to speak to before. But we have seen in elections in the last couple of months where Democrats have overperformed from 2024, and in such a way that if that continued through in November, they would likely take the House and have a shot at the Senate as well. That ends Donald Trump's free run in Washington were that to happen. So the stakes are reasonably high, and you are seeing the president go forward with an awful lot of policies toward affordability. Now, lowering rates is certainly one of those things that he wants to see happen, but he doesn't necessarily have too much direct control over that. He has control over some of these more populist ideas that he's putting out right now, and you're going to see that this White House and this president go forward with some of those things, even if it makes some of his fellow Republican members of Congress a little bit nervous.
Derek, thank you. Derek Wallbank there in San Francisco for us, our senior editor. Let's bring in Ecaterina Bigos here, Asia ex-Japan CIO at BNP Paribas Asset Management. Good morning and very nice to see you.
Good morning.
Does this bake in a further premium into U.S. assets, whether that's specifically, I guess, the dollar and the treasury market? How do you think about this?
Look, I think if you had to pull back a little bit from the news flow, and then there's a lot of news flow, and for the moment,
a ton,
and a lot of these headlines, of course, as your reporter said. If you had to pull back a little bit, what is actually happening in the U.S. economy, and ultimately the biggest opportunity for the U.S. in 2026 and beyond is to reindustrialize, to become a lot more of a producer of what it consumes, and ultimately to that low-income population that will be a beneficiary. That certainly that population is expected to benefit. Now, what are the catalysts for that to materialize in 2026 and beyond? And we started the year not in a perfect place, but in a good place when it comes to financial conditions. And again, the Fed has an easing bias, but again, we don't know the timing. But I think the willingness to ease, if they need to, is that we're starting financial conditions that are good. Inflation is in check to some degree. We have fiscal stimulus from one big beautiful bill that is in place that is going to help reshoring of some activity to the U.S. So the formation of resilience of U.S. growth, I think, is there. And I think this is what we need to kind of, as an investor, need to pay attention to. And of course, there's headlines regarding, at the moment, as I say, the headlines for now. Of course, there are uncertainties, but the Fed independence is still there for now, right? I think it's being challenged, obviously, the headline, but it's not actually impacted in kind of a critical way for us to start concerning.
So there's still value, I guess, in staying in U.S. assets, do you think, right now? I mean,
Absolutely.
There's many that are talking about rotating to Asia, where safer waters might be in this part of the world.
Right. I think diversification, if you look at 2025, diversification paid off significantly. And this is not just about rotation. I think investment diversifying into Europe paid off. So I think as we go into 2026, investors should diversify. And again, because U.S. rally is still very much concentrated. Now, the broadening story for U.S. does have leg to move in 2026, and the catalysts I've talked about a bit earlier, I think the catalysts are there for that broadening, and ultimately investors are not going to look at this Magnificent Seven, but what are the ramifications to the broader market? What are the ramifications to the magnificent spending in the economy, right? What are the implications of one big, beautiful bill, and where is that reindustrialization kind of leaning towards? And I think that when it comes to U.S., it's not just staying investing in mega caps, it's diversifying other smaller cap companies and diversifying away from U.S. as well into Europe and Asia notably as well. But again, not to forget that we're still in very much concentrated market where it's still run by this AI tech story.
Yeah, talk to us more about Europe. What needs to happen, and why do you think so highly about what's going on there?
Well, I think ultimately, if you look at Europe, what has happened over the last 5 years, if not a decade, they've lost competitiveness and largely lost competitiveness against China for its exports. 60% of revenues for Europe. It's one of the largest economies that relies on the global growth, right? So And China has taken a large part of that share because they become more competitive, particularly in high value-added sectors, right? So what Europe needs to do is really rise its competitiveness, right? And how do they need to do? The key challenges for them is the unified capital markets, is the unified regulation in Europe that needs to change. And that is, again, we've seen some green shoots around that. We've seen some various policies that are put in place, but we need to see speed for policymakers to actually push that through, for those changes to materialize and for the economy to become more competitive. And the other part is strategic economy, and we've seen already the fiscal stimulus from Germany. That is going to bring a lot more strategic autonomy, not just for Germany, but for Europe. That's regarding defense, but it's not just defense. I think this is a broadening of kind of the growth that it's structural growth that it's manifesting in the European economy.
We hit most of your conviction calls. The bond story is interesting, right? Because you have, of course, what's going on in the sovereign bond market where long yields continue to kind of perk up a bit, given what we've been seeing around the world. But credit, you say, still has value right now? I mean, how should I be looking at credit this year?
So credit ultimately is about all-in yields. And I think you could say valuations are fairly tight. They're tight. I wouldn't say stretched. They're tight. I think you have to look at various elements, demand supply. You have to look at structural shift. The quality of IG market and high yield market has improved over the years. So you could say that the spreads are reasonably tight. They're not kind of excessive. And when it comes to 2026, the demand for that yield is still going to be present, again, from real money buyers, from investors that are looking to capitalize and lock in that yield that is present. Now, what are the vulnerabilities? Again, as I said, we're entering the year not in a perfect place, but in a very good place with financial conditions, growth is staying resilient, and that is supportive for credit. So, and then when we look at some of the elements related to demand supply, I think one part that we need to pay attention is a little bit of an increase that we're seeing in issuance. For instance, particularly in the U.S., in January, particularly, we've seen a significant issuance in IG market, and this related a little bit to the tech story. Not something that we need to worry about. We need to monitor and see, is that going to be excessive for us to worry about the spreads?
Ecaterina, thank you. Ecaterina Bigos there, Asia Ex-Japan CIO at BNP Paribas Asset Management. And coming up this hour, we're going to head to the JP Morgan Healthcare Conference in San Francisco. We have Ascentage co-founder and chairman and CEO Dajun Yang will join us exclusively to talk about their growth plans and the outlook for the China biotech industry. And we are counting down the opens of trade in Shanghai, Shenzhen, and Hong Kong. We are seeing, when it comes to this equity rally in China, getting a little bit more momentums here. Your reference rate just crossing through 701.20. This is the China Show.
Yeah, the message is they've got to show humanity. They've got a big problem, and I hope they're not going to be killing people. And I'm going to have a report very soon. Ideally, you'd like to see it, but what we want to see is we don't want to see people killed, and we want to see a little bit of freedom for these people.
President Trump there warning Iranian leaders to show humanity as he and his team consider their next move. Those were the latest comments from the president on Iran. And earlier, he also called on Iranians to continue their protests against the government, promising that help was on its way. But he did not specify exactly what that means. Let's bring in Jill Deesis, our news desk managing editor. She's with us here right now. So, are U.S. strikes in Iran imminent?
I mean, I think at this point, Yvonne, what this is telling us is that we have to preserve the possibility that there may be some kind of military action. We know that Donald Trump, the Trump administration, they've been briefed on the options that are available to them, including the potential to strike non-military strikes, or non-military sites, rather. We also know, obviously, that Trump has already undertaken some efforts to apply some economic pressure to Iran. Just earlier this week, he announced tariffs of 25% on any nation that does business with Iran. But at this point, you obviously just heard from the president himself. It does seem like there's further discussion underway, and that does include the possibility for military action here.
Domestically, it's very difficult to decipher, report on, and figure out what's going on because of the blanket ban on the internet. But what do we understand is going on right now on the ground, and how do we basically, how does that inform us about what the possible next steps are from sort of the external environment?
Right. Well, I think, when you're looking at, look at what Donald Trump has said, right, which is essentially that if there are deaths, if protesters are killed, then that's really going to sort of raise his possibility for considering military action here. What we have heard are reports, and this is including from some human rights groups, news agencies that are looking into situations on the ground that a couple thousand people are dead in the aftermath of this unrest that's happening in Iran right now. We've also seen other figures suggesting that somewhere around 10,000 people have been imprisoned in the wake of all of this. So, I mean, you are looking at a pretty significant human toll already. Now, were that to continue to escalate, we're already looking at what is the most severe instances of unrest in Iran since the 1979 Iranian Revolution. So this does potentially threaten to escalate. And we do, again, know that these are considerations that Donald Trump has said that he's making when he's considering whether or not military intervention is needed on the part of the United States. And again, I think you also have to put this in the broader international context of Trump is coming fresh off of what he sees as a successful operation in Venezuela to oust Nicolas Maduro. So in some ways, he may be emboldened to pursue further action in Iran if he deems fit.
Yeah, he's moving to a new frontier, and it's a developing story. Jill, thank you so much. Jill Deese is there. As far as markets go, so equity markets, somewhat different tune there, but when you look at other parts of global markets, so silver now at a record high. Again, fresh record, $89 on spot silver. Commodity prices are also moving up. So we showed you coming up on your screens is the Shanghai contract, which is reflecting the big move in Brent overnight. We're now looking at, there's a specific level. Thank you so much. That was the high earlier on. SCPA coming up, and we are better by 2 to 3%. There we go. 2.5% in Shanghai crude. That's a reflection of geopolitics. Plenty more ahead. Right, welcome back. Very, very briefly, in terms of eco data, so we are going to get trade numbers coming up. We could get credit numbers also. That's from it's a window, of course, from today. We talked about the rally taking place in turnover there. Stocks to watch. We'll get to the details specifically on these ones coming through as well. And we have bond sales out of Hong Kong and also out of China today.
Yep. And so there's a lot to look out for. And when it comes to some of the stocks to watch, obviously the oil story, given the pop in oil prices on the Iran situation. We talked about just silver once again hitting those records. So certainly commodities are certainly getting more of a limelight here once again. Some of these oil majors like PetroChina are up some 1% and really kind of reflecting what we're seeing with Shanghai crude also catching up, although Brent has come off some of the initial moves already. We're holding around $65 for Brent as well. Obviously, we're watching very closely what happens with the tech space as well, just given how much that rally continues in the back of tech leading the way as well. But whether we see more broadening out is certainly the key question. The open is next. This is Bloomberg.
Welcome back. You're watching the China Show. There's a dip in the temperature here in Hong Kong today, so it's relatively cooler than it was this time yesterday. As far as equity markets go, still on the hotter side of things. 2-month highs. In fact, 27,000 now on the Hang Seng Index is in play. Weaker on the currency. We have some data coming through in terms of trade numbers, but also geopolitics playing out. You look at silver and you understand why.
It seems to be like the precious metals are still that cleaner hedge right now. When you take a look at that, we see that with gold, we see that with silver as well. It's not just a rate story, I think. It's also a little bit more about confidence in the midst of all this uncertainty, as you say. So gives them a little bit more fodder there when it comes to the silver bulls. But yeah, and it really kind of brings to mind what happens in China as well, because it seems like we continue to see that optimism continue here, given that the U.S. side of things continues to be quite volatile, the news flow at least. What we have been seeing, of course, is this sort of these technicals when it comes to HS Tech, for example. We bounced above that 100-day moving average. So that certainly is one thing to watch very closely. But Shanghai is still looking okay. We're flat there, but CSI 300 is up about 1/5 of 1%. Certainly there's going to be a lot of talk about the A or H share sort of factor here. And Wendy Liu from JP Morgan just came out with a note talking a little bit more about how they still prefer MSCI China over CSI 300 until March, right? They're talking about valuations and all that still looks pretty favorable for that for the next few weeks. But they still favor small caps over some of the large caps here, given the rotation that we have been seeing as well. So that certainly is one thing to watch there too. We're watching Shanghai crude, obviously catching up with some of the crude markets that we've seen given the situation in Iran. So we're up 2% for futures in China. We'll talk about Kuwait in just a moment here, but let's flip the boards and see how Hong Kong is doing. We continue to see some gains, right? We talked about the record turnover that we saw yesterday, yet again. So there you go. You are seeing quite more optimism here today. We're up about 0.4%. HS Tech continues to catch a bid here. Alibaba's up some 2% right now. Keep in mind, PDD had a bit of a down day overnight as well. So we're watching very closely, of course, the commerce space there still. Hong Kong dollar, not doing much, but Chinese currency is weakening a little bit, but we're still talking sub 7, which really is what people say is driving a lot of this rally in some ways as well. With that correlation, we haven't really seen both rallying at the same time for some time now.
Yeah, no, we haven't. Now, okay, lots of individual. Okay, actually, let me put everything together because the note from Wendy Liu, in terms of her top picks, include NetEase, Baidu, PDD. Yvonne mentioned that Moutai is also part of that group that Wendy Liu likes. And the reason we bring Moutai up is because there's separate news out of the company here in terms of the pricing mechanism, more dynamic. On a whole, I believe it's on the wholesale level because that's really what the company affects as far as the market goes. The other story in the, I want to call it F&B space, it's more the B space, the beverages space is, we'll get into that in fact right now. So you have Sichuan Swell Fund, traded on the mainland, coming up on your screens. And the reason we're looking at this specifically is Diageo is said to be weighing options for its assets in China. In fact, for more in that story and what we're watching and what that might mean broadly speaking, joining us here is our deals reporter, Manuel Baigori. Yeah, so what do we know about this?
Yes, David, it's a fascinating story, which has reported about it, and exclusive by Bloomberg News, in which we revealed that Diageo, following what other companies, multinational companies, are doing, are reviewing their footprint in China, their assets, and trying to see whether it makes sense or not for them to stay in the country. I mean, there is different dynamics. They are facing very steep competition from the local players, which have become a lot more nimble and sophisticated in the last, a couple of decades, and they are really struggling. So we saw last year the likes of Starbucks or Burger King doing a similar exercise in which they sold a majority stake to a local player or to a private equity firm with more local expertise. It could be also strategic with roots in China that might be able to help the asset turn around. So I think Diageo is just the latest example of these global multinationals rethinking their approach to China.
You got to add that people just aren't drinking premium liquor as
or
much
liquor
either,
generally
against
speaking.
that backdrop, right? But what options are available for Diageo? What sort of potential divestments are we talking about?
Yes, Yvonne, and I think you made a very good point about the changing dynamics in consumption for beverages. Diageo had been trying to, trade up, so to speak, into the more premium beverages, but they haven't been so successful yet. So they're trying to figure out. In terms of options, the most logical one would be a full exit. They've got this majority stake in Sichuan Swell Fund, which David was pointing out in the market right now, and that would be potentially a sale of that stake, other assets also in the country, and what we've seen is some of these global players, they don't fully exit. They prefer to retain a stake. So we may see Diageo potentially doing something similar. Starbucks did that, for instance. And the hope is that, if this new partner helps turn around the business, then, they still have a foot in such an important global market, right? So they don't want to fully exit, but they realizing that after all these years, they are not competitive anymore.
Sounds like they want to have the Johnny Walker And have it too. Okay. That makes sense. Okay, Manuel, thank you. Manuel Baigori there, who leads our deals coverage here in the region. Let's stay gently in the consumption theme here.
Are you hungry?
I was about to say, what does Heidi Lau go with, beer or coffee or Johnny Walker? Good news as far as Citi goes, because you have the founder returning to the CEO position effective late yesterday, and Citi says they expect the company's top line growth to re-accelerate, and that's a positive development. And as far as, of course, the hot pot chain company, fair disclosure, I'm a regular at Heidi Lau. It's fantastic. In fact, I'm a member as well.
Are you?
Yeah, there's a membership that you chime in. Yeah. So I get that flag. So when you sit down, you're a member. They put this flag on your table to just make sure that you're a frequent flyer.
Yeah. Wow.
Yeah.
I'm a fan too.
But anyway, well, clearly the CEO is too. The founder is back. He's back as CEO. And clearly the markets are one of the biggest moves to the upside right now here in the Hong Kong market. We're up 10% on the stock.
All right. We're checking other corporate news this morning. The Trump administration has eased export rules for NVIDIA's H200 AI chips to China. The U.S. Commerce Department says it will now review, applications case by case, although companies must follow requirements, including certifying no shortage of the chips in the U.S. Exporters must also limit shipments to China to 50% of U.S. production and follow strict customer checks. The Korea Exchange is looking to extend trading to 24 hours from December 2027. The move comes as other bourses, such as London and Hong Kong, also consider extension of their trading hours to win over retail investors from Asia. Korea Exchange already aims to extend trading to 12 hours a day from June. And Bloomberg has learned that Netflix is working on revised terms for its Warner Brothers bid and has discussed making an all-cash offer for the company's studios and streaming businesses. Sources say the changes are designed to speed up a sale that could take months to close and faces pushback from politicians, as well as a hostile bid from Paramount Skydance. The current offer includes a mix of cash and Netflix stock.
Right, coming up here, we'll be speaking with Ascentage here. Its co-founder, chairman, and CEO, Dajun will be joining us exclusively to discuss the company's growth plans and the big industry trends we're seeing across what's really been and what remains, when you look at the past few years, has been, up until, of course, recently, an incredibly hot part of the market, the biotech sector in China. A deeper dive coming up next. This is Bloomberg. Welcome back. So some more than healthy returns, more than double the benchmark. When you look at some of the healthcare plays, this is the sub-gauge here in Hong Kong. We're up, let's call it 95% over 12 months. That's more than double the 40% rally on the Hang Seng Index. One big contributor here to the rally is really this refocusing from global investors back on the Chinese financial biotech sector, right? And, the JP Morgan Healthcare Conference is really this sort of marquee event for deal making in the sector. Lots of announcements there. The Hang Seng Healthcare Sub-Gauge, have a look at this, 5% over the last 3 days. So after several drug makers announcing some positive updates, so certainly the window of opportunity is upon you, investors. Watch
Time to
this
move
space.
markets, yes.
Let's talk about this even further and get into the weed of things here. Joining us exclusively is the CEO of one of the companies presenting at the conference on Wednesday, Ascentage Pharma. Dajun is also the firm's co-founder and chairman, joining us from San Francisco. Good morning, Dajun from the Asia Pacific. Thank you for joining us ahead, of course, of your presentation, which I hope we can talk about a bit later on. But yeah, give us a sense of what's been hot. What's your sense of what's hot in the industry as we kickstart 2026?
Yeah, I think we have a great start. First of all, thank you for having me. This year, JP Morgan meeting has a great start with a sunny day, warming every day. I think this is my almost 20 years coming to the JP Morgan conference. This is once a year, the biotech CEO, CFO, CSO, CBO all come to the San Francisco around the world. So it's a great start for the industry as we looking forward to all the R&D development, business collaboration, merger acquisition. and all the companies will have a chance to make presentations at the JP Morgan conference. This is actually the 44th year since the starting of 1983. Has been around.
Yeah.
This is really the start of the year for biotech industry worldwide.
And you said you've been going for the last 20 years, Dajun, so you've seen it all. I'm just wondering, given how hot of a sector Chinese biopharma was last year, has there been any sort of change you see this year around in terms of, participants and investors' interest in this space?
Yeah, I think this is a really different, especially compared 10 years ago. 10 years ago, there are not many biotech companies coming from China to make a presentation at the JP Morgan conference. Ascentage is one of a few. We have been presenting at the JP Morgan conference for the last probably 10 years. And very fortunate every year we are able to present and bring up the update of progress we made in the R&D, the clinical development. And this year, actually, the first time we're presenting Ascentage at the main conference at the Westin Hotel. This is the first time because previous years we're presenting at the Asia Pacific sector. Has always been a great opportunity, but I think this year is the first time. Not many biotech companies from China. I think there's only a handful, about 3 or 5, presenting at the main conference, facing the majority investors, coming from the U.S. and Europe.
Main stage.
Yeah, well, you forced my hand here. Can you give us a preview, if you can give us as much details as you can on what you're about to present?
Yeah, I think the first, 2025 has been a great year. We achieved all the milestones we discussed, presented last year. Actually, last year about this time, we have to cancel our presentation at the JP Morgan because we were within the window of IPO on NASDAQ. We did the IPO, successfully IPO a week after JP Morgan meeting last year. So within that time frame, we have to be silent. So we have to cancel our previously arranged JP Morgan presentation. And of course, we did really well. We were the first biotech IPO globally on NASDAQ, just on the January 24 last year. Number one. Number two, I think Ascentage biotech IPO has been successful. Performance is one of the best one in the first 6 months. We double our IPO price within 5 months. And overall, I think it's been a great year for Ascentage, and also the biotech sector from China, and also a lot of good progress among the sector and the IPO, and also amount of money raised on Hong Kong Stock Exchange.
Yeah, Dajun, it's interesting, right? It's your first year that, at JPM, where you are now a U.S. listed company. You're also listed here in Hong Kong. How does the funding environment look like to you right now? Do you think it will only improve from here when it comes to Chinese biotech?
Yeah, I think since 2024, Ascentage, including the other biotech companies from the sector in China, Asia Pacific, has been recovering. Okay, we feel finally all the sector doing well in terms of more funding from both the primary and the secondary market, and a lot of deals coming from biotech company in China. 2024, we also made a historical move that we did, partnership with Takeda for the global commercialization rights with the option agreement, and that's a very important validation of our R&D and the data with a global MNC company like Takeda. Since then, our stock price has been more than double or tripled, and we raised substantially on our IPO and also follow on last year. I think last year we also doing well financially. We have sufficient cash to support our R&D program through 2027.
Oh, okay. So I was going to ask you about funding, but you just mentioned it. just now. Can you tell us more about the status of the Takeda deal and when, as a company, you expect to realize that from a commercial standpoint and financial standpoint? When does that really start to show up in your earnings?
I think, of course, that's a great partnership. Takeda is one of the best company in the CML and the ALL space with one market product globally. We are doing everything together, advance our clinical program. And last year, besides the CML, we also got a FDA and the EMA clearance for the global phase 3 registration trial and the Ph positive ALL. That's a really significant move because we have shown part 1 data at the ASH just last month, where we double the first line ALL patient in terms of 3 months CMR rate. We're moving forward in both CML and also the ALL for the global registration trial. I think the partnership going well. We're working together in the older front, ready for commercialization, hopefully in 2 years.
Okay, 2 years. Okay. Thanks for giving us a bit more timeline there, Dajun. It's interesting. You mentioned about Ascentage really recently launched this global phase 3 study of your lead drug. I'm not going to try to even read it because it's a long one, the name of the drug. But that's something very few Chinese biotech companies have been able to achieve. Can you tell us how did you do it? And what does it tell you about the challenges some biotech companies in China face when it comes to these sort of later stage trials?
Great question. Actually, Ascentage has been around for 16 years. Ascentage is probably really unique. We are a global biotech company. We established the company actually, for me, about 20 years ago. We come to China in 2005, and then we have been working on all the novel products for the unmet medical need globally. So I think Ascentage from day one is focusing on the really truly novel development compounds and also for the unmet medical need globally. Of course, there's a lot of challenges, but I think in the last 10 years, China, both regulatory and clinical development quality has been improved dramatically, especially since it joined the ICH about 10 years ago. All the GCP, GMP, GLP quality has really met the global standard. There are a lot of due diligence performed on those clinical trials, product development. And the more important, I think, for Ascentage, we're unique, is that we have doing most of our clinical trials in U.S. Most of our R&D is actually first cleared by FDA, went to the clinical trials. And then, of course, we also filing the IND simultaneously with the CD in China. The gap between the FDA and the CD approval is getting less, almost simultaneously now. And that's very important. I think the key for us to be successful is really maintain high quality for the clinically unmet medical need, but at the same time advance our program, both the US and China. I think once you focus those unmet medical need with the clinical data to show the differentiation, to show the good safety and the quality, efficacy profile, then you will have all the progress made and be able to present at like a conference at JP Morgan.
Good milestone. Well, let me ask that question now. What do you think the next milestone will be for this sector as a whole?
I think there are a lot of discussion at the JP Morgan this year. You can see almost one deal coming from China every day just for this year, right? And last year is historic, the number of the deals and the transaction dollar amount, over $137 billion, about over 150 deals. The discussion, the momentum at this conference right now is everybody looking, at least the majority of people looking, year 2026 will be more deals or dollar amount than 2025. So optimistic is that this is just the beginning, and we'll see more coming from the Chinese biotech company, or Ascentage is actually a global biotech company.
Dajun, we look forward to your speech. Good luck on the main stage there, and of course, give us any news once It comes through here from the JP Morgan conference. Dajun Yang there, co-founder, chairman, and CEO at Ascentage Pharma, joining us from San Francisco. Our healthcare conversation continues in the next hour. We have Sino Biopharmaceutical chairwoman Theresa joins us in her first live TV interview after their latest acquisition. We'll have more, of course, on that deal next. This is Bloomberg.
Okay, welcome back. We are just awaiting the latest trade numbers that should be out over the next, let's call it 1-2 hours or so. Preview on your screens of both the data we're expecting and the briefing that's going to give us more context really in what's going on there. But yeah, so we're waiting for this. Apart from that, what else is
certainly the key question is, can this export engine continue for 2026, right? When you have, a lot of the offset from, exports to the U.S. have dwindled, it's really been offset by the rest of the world, Europe as well as Asia, that's been taking up a lot of these exports, right? How much can that machine keep going? That's going to be the key thing. But we're expecting a little bit of a slowdown, but as Bloomberg Economics says, could look still resilient as we wrap up, of course, the end of 2025 and that data there. We'll have much more coming up the next hour. You're watching The China Show. All right, we are checking, of course, trade data that could be coming out in the next few minutes or so. What we have so far, I've seen from CCTV, is the year-to-date numbers for 2025, and where we actually have seen exports rising some more than 6%, so 6.1% in renminbi terms as well. Imports as well, we got those numbers, but that leaves that trade surplus at a whopping 8.5 trillion renminbi. So certainly it does show, of course, the trade side of things was still quite resilient, if not, you could say, quite strong for China for 2025 in the face of course, this trade war. The key question is, does that sort of momentum continue for 2026?
Yeah,
what's the external demand picture looking like?
Absolutely, and with a stronger currency too, right? That's a conversation that's happening right now within the FX strategy space, and whether or not a stronger currency on the Chinese side might actually start to offset some of the tailwinds coming through on the trade side as well. That's a different set of conversations right now. We are weaker, as you can see, on the Chinese currency. It's a stronger dollar story, which is, we'll get into the context of this in a moment, because you have to look at this from the moves we had overnight post-US CPI, when the market initially reacted and then faded the move going into the close. It's the JP Morgan story as well to come out as far as the equity market goes. Right. As far as equities specifically in Hong Kong are concerned, extending the gains, so we're now roughly at about 2-3 month highs on the Hong Kong benchmarks. On mainland benchmarks, we talked about this. These are multi-year highs already. And turnover has gone from 3.5 trillion on Monday. That was a record. 3.6. That was another record on Tuesday. First 30 minutes, we've already taken out 1 trillion as far as that the value of shares traded are concerned. The rest of the region, interesting too, what we're seeing over in Japan, right? So a follow-on move. We're now at 54.4 on the Nikkei. Look at the yen. We're trading at 159. More on that in a moment. The other thing, too, to tell you about is commodities, right? A lot happening there. So silver's at a new high, as well as tin. And separately, the Shanghai crude contract is catching up to the massive gains that we had in Brent as well. So this is a sector that continues to give us a lot to talk about almost every day of the week. Silver stocks coming up on your screen, just a reflection, I guess, of the pop in silver prices, which, as you can see, is now flirting with that $90 handle.
Yeah. I mean, the metal space is just looking hotter and hotter each day. Let's bring in Mark Cutmore now, MLive executive editor. He joins us now live from Singapore. Mark, it's a big day. When you look at Chinese, there's equity rally that continues. You have precious metals that continue, and the metal space in general that looks quite hot. U.S. inflation that came out that looked, relatively speaking, quite benign. But what do you think is top of mind for you today?
I think that the general trends we're getting at the moment are, most of them are real 2026 themes that are short-term frothy. So I think the dynamic for traders at the moment, or for investors at the moment, is Do you chase the rally now, or do you bet that there'll be a decent pullback at some point? What will be the catalyst for that pullback? And so I think that's the real kind of quandary that everyone's kind of struggling with. I think that, the idea of yen weakness, it'll again be an underperformer this year. It's been an underperformer for the last 5 or 6 years. I remain a structural yen bear, but not necessarily dollar yen's the way to play it, because it'll probably be a weak year for the dollar again. And part of that dollar kind of pressure is the undermining of the Fed, and that's why you're seeing precious metals continue to gain. So that's a sustainable theme as well. But these moves have gone a long way very quickly. So I think now it's about tactical trading around sustainable themes, and that's where it's very difficult.
Mark, just specifically on the Japanese story, following, I guess, more information now around snap elections, why do you think the market is moving the way it is, and it has, really, in Japan?
Look, I think that they're doubling down on the Taikichi trade with the snap election call. And that's the idea that, this is a government that's in favor of fiscal stimulus for, which is going to obviously drive the economy. Foreigners buy Japanese stocks hedged, and it tends to be circular. As the market goes higher, they tend to kind of hedge more, and they tend to kind of buy more. It's like momentum trade. That's driven by the fiscal side, both boosting the stock market, but also increasing the debt scenario. And, as you know, David, I've been a structural bear on the yen for many years and will remain one for a long time to come. This is a country with one of the slowest growing economies in the world for year after year after year. And that's despite deeply negative real yields and a massive debt pile. It can't afford positive real yields. So, there might be the odd 6-month period where the yen gains. But structurally, the only way for Japan over a really long-term horizon is to monetize its massive debt pile. It can't afford any other way out of it. And that ultimately means that, the yen depreciation trade is a very long-term structural thing that will work on a long-term basis. You just got to tactically manage around it.
Yeah, Mark, I want to go back to something that you mentioned, right? It seems like what we're seeing are the similar playbooks of 2025, which basically we've gone to more frothy levels, right? We take a look at the IT hardware space, for example, precious metals, as you say. They were all kind of the easy sort of trades, right, of 2025. When you mentioned everyone's talking about rotation for 2026, what could spark that rotation, right? You're talking about catalysts here. What do you think in your mind could actually derail this?
So we've got a couple of different types of rotation. We've got the geographical rotation, and we've got then, the rotation from growth to value, and we've got rotation within the kind of AI sector. And I think we're already starting to see elements of all of those in recent months, and I think they're all sustainable. So yet again, I think US stocks will underperform in 2026 versus the rest of the world, and I think that Asia and LATAM are the outperforming regions. So I think that's a theme from 2025 that will carry over to 2026, and of course the currency, as we discussed, is one element to that. I am someone who's, I'm a macro guy who comes to stocks from a long-term, top-down basis, and I fall for every value trap going. So I tend to be someone who permanently thinks small caps will catch up to growth stocks, and I've been wrong for many years. But finally in recent months, small caps have been doing better, and I think that's a kind of theme there, that value discounted stock markets can perform over time. And this is not a bearish view on expensive US mega cap tech stocks. It's just saying that they're not going to be outperformers again, and they weren't in 2025, and they won't be in 2026. And I think within the AI theme, that's going to be a constantly dynamic theme of how people play it. Again, as you know, reiterating a view we talked about last year, is that we are very clearly in a very, very large AI capex bubble, but we're not close to that bubble bursting. And that's why, we continue to be very bullish stock markets globally, because we don't think the bubble is close to bursting. It will burst horrendously at some point, but you got to remember the bubble is on the capex side more than the valuation of stock market side. So how it bursts will be very selective.
Mark, just I guess the last macro question, she alluded to that. I wonder, you had the CPI print overnight. We know U.S. yields have drifted higher the last, let's call it 2.5 months. Can you see a scenario where 2026 could be Fed cutting rates, maybe by 2, inflation cooling a little bit further from current levels, but yields will be drifting substantially higher from current levels? Do you see that scenario taking place?
like, it's obviously a possibility, but no, I give it a very, very low probability. To me, I kind of think that the US Treasury story is a little bit binary. My base case scenario is that actually Treasuries have an okay year, yields hold in okay. And, you know, I actually think, you know, probably yields probably decline slightly from here. But there's a binary tail risk that we worry about the fiscal side again, and they really blow out. But that's not my base case.
Fantastic. Mark, as always, thank you. Mark Cudmore there, our MLive executive editor in Singapore for us. We're live from Shanghai later today. Lots more coverage coming through there. Of course, our chief North Asia correspondent, Stephen Engel, will be with us. In fact, let's bring him in. Steve, what do you have in store? Yeah. That's not Steve. That's Steve's guest.
Well, as you
Steve,
can see
tell
there,
us about
Samson
your guest.
Lo, we'll be talking to him. We'll be talking we'll be talking the China M&A trends. Obviously, you just saw Samson Ho come up there on the full-screen graphic. He's UBS's global banking head of M&A here in Asia Pacific. We'll be talking to him later this hour. Plus, former U.S. diplomat Bill Klein joins us to chat U.S.-China relations. But Samson Lo is coming up first. This is Bloomberg.
Yeah, as you talk about that promo in Davos, I'm guessing one of the top sort of things on the agenda is going to be central bank independence, I'm guessing.
Well, lots of them are going to be there.
Just given just the chorus, or I would say a rally of global central bankers really putting their support behind Jay Powell against this backdrop, of course, these criminal investigation that's underway from the Department of Justice. So certainly it's a rare sort of statement that you see from some of the major central banks in the world, right? They stand in full solidarity with the Federal Reserve System and its chair, Jay Powell. It's interesting, too, even within these countries, right? We talked about the BOJ. They decided not to kind of be included in this statement. I mean, RBNZ did, right? The newly elected Reserve Bank governor, Anna Brentman. But it's causing a bit of drama, I guess, locally, from the foreign minister, Winston Peters, who has said that, you know, they shouldn't have get involved, right? They have no role, they say, in U.S. domestic politics, which is quite interesting, too.
Respect their independence, right? If you want to make a joke on it. Respect their independence. The RBNZ said, well, we did.
So remain independent.
That's why I did.
And,
if you want to look at that statement, in fact, I think it's on Winston Peters' X account. The RBNZ has no role, nor should it involve itself in U.S. domestic policies. We remind the governor to stay in her New Zealand lane and stick to domestic monetary policy. And I wonder whether or not them chiming into, well, this specific issue in the U.S., whether that's ruffled any foreign policy plans that they've had between both sides. But yes, like, this was not expected to have come there, but here we are.
Yeah, I mean, and it has been, you see, we talked about the global central banks, but even you've seen opposition even from Republican lawmakers, of course, on this subpoena. So certainly you are seeing more signs of people saying that this could actually, what Trump is doing could actually backfire, right? And you're already seeing that a little bit in the markets, really, when it comes to long end yields. But we heard a lot of them talking about this, right? About overall the concerns around Fed independence. Let's take a listen.
He's billions of dollars over budget, so he either is incompetent or he's crooked. I don't know what he is, but he doesn't do a very good job.
It's still not a slam dunk, even with a new Fed chair, that rates actually decline, particularly if the administration jawboning and potential legal challenges raise concerns about Federal Reserve independence and make some of the voting members want to be sure that the economic conditions justify a move.
When there's attempts to unduly influence monetary policy decisions, when those are successful, those often lead to very unfortunate economic outcomes, including economic instability and high inflation.
When you talk to members of Congress on both sides of the aisle, they understand this. They may have different rhetoric out in public, but you talk to them one-on-one, they understand how critical the Federal Reserve is, and they are going to push back. That's where I'm an optimist. I don't think they'll let this happen.
Yeah, the analogy I can think of from a corporate perspective is the role, for example, and they've played a bigger role more and more, independent directors into the board of the directors, right? There's a reason why from a corporate governance perspective, that everyone is net better off. So I think Jamie Dimon also chimed in on this too.
It was a bad idea, not a great idea.
Not a great idea.
To lead to inflation picking up
and higher rates.
Higher rates.
Yeah.
Which is counterintuitive of what the president's trying to do as well. The president also responded saying he's wrong. So there's a bit of Trump versus Jamie Dimon there this morning as well. But it's really kind of this whole discussion debate has really kind of led to even and leaked into, well, I shouldn't leak, but has emerged in these late night talk shows in the U.S. as well. I was watching the Jon Stewart clip from The Daily Show that had a bit of a shout out to Bloomberg Surveillance and the team there. They're saying, look,
that's a good one.
We got to talk about Jay Powell. Let's take a listen.
So anyone who doesn't listen to Bloomberg Surveillance in the morning, you can just leave the room. I'll wait. Okay. Wow. That dude, he's struggling. It appears the chairman of the Federal Reserve is having a liquidity crisis. That's going to kill at the terminals.
I love it. Jon Stewart trying to crack a Bloomberg joke.
Yeah.
A finance joke. But yeah.
Well, I mean, fantastic.
Which is what you do every day, David, really.
Do I?
Yeah. Anyways.
Yeah.
Maybe you should host something like this. Finance related.
That's
satire.
That's the future. That's the future. Hopefully not too soon. Anyway, we'll have more on the serious news coming up. This is Bloomberg.
All right, we're watching Sino Biopharmaceutical shares today gaining after the company fully acquired drug maker Daijia in a deal worth up to $172 million. Now, Sino Biopharm says the acquisition will accelerate its advances in chronic disease treatment. Sino, listed in Hong Kong over 20 years ago, is now one of China's largest pharmaceutical firms, and its areas of focus include a wide range from oncology to liver diseases, and lately they've got into even weight loss drugs too.
Yeah, and the market cap tells you on your screen 16.6. Here's a look at that since the listing back in 2000. This is in US dollars, and as you can see, it's coming up on your screens. There we go. Really one of the largest Chinese biotech firms out there. Joining us exclusively from Beijing now, in fact, is the company's chairwoman, Theresa, to talk us through what the company's plans are this year, your priorities, and of course this big deal that you guys just announced. Theresa, good morning from Hong Kong. Thank you for joining us. Why don't we start with the announcement that you guys made? Talk to us about the rationale, why this specific company, and what the next steps are as far as this transaction is concerned.
Yes, thank you, David and Yvonne. Thanks so much for inviting me. I'm the chairwoman of Sino Biopharm, and this is my 10th year in the company. So for the past 10 years, we've transformed ourselves from a generic company into one of China's leading innovative pharmas. So we have a very strong leadership position in oncology and major chronic diseases. So last year we acquired a company called Innova that gives us like a very good next generation portfolio of oncology assets. And this year in the beginning, yesterday we've acquired Daijia. And after this acquisition, we will gain more than 20 new innovative programs, filling important gaps in our cardiovascular portfolio and also our weight loss portfolio, because we have very interesting assets like thyroid beta, like Inhibi, and that can combine with our existing GLP-1. So very exciting and interesting metabolic disease programs. And yes, I think this will definitely strengthen our position in chronic disease further. Yeah. Sorry.
Yeah, it's quite interesting to see. It's okay. It's interesting to see this transition that the company is making, right? You've all of us, we've been this kind of traditional old guard pharma players that really is now delving into the whole innovative space, right? And I'm just wondering, What does it tell you, this transaction, the two that you've made in a year, about your overall plans? Are you looking to acquire more companies?
Yes. I mean, now I think it's very clear that we're at the beginning of the next era of innovation in China. So the biotech ecosystem is expanding rapidly, both in scientific depth and speed. And as we can see, right, last year probably there were over like 150 deals and amount total up to more than 100 billion. So I really think China is becoming an innovation hub for global innovators. And then I think we really need to leverage this. And Sino Biopharm, we're on the top of this. For the past few years, we've worked closely with more than 30 leading biotech companies in China, and to really strengthen our innovative position. So yes, if I come across another company, same quality as Lenovo or Hygieia, then yes, definitely we'll keep doing M&A.
Yeah, well, I'm curious, have you earmarked, even if it's a rough number, Theresa, capital that you perhaps are setting aside for more acquisitions, to your point you just made there?
Yeah, so currently we're really abundant in cash for our company. And then, so maybe, so every year we leave around like a few $100 million for acquisition or other BD collaborations. And you can see in our, so also in our R&D expense. So every year we are increasing as well because it's very expensive.
Okay. And when do you see these deals really paying off, and how, Theresa?
Yeah.
I think it will be paying off soon because, as I said, like now, one is definitely to get it to market, which will be in a few years. But this will strengthen Sino Biopharm's mid to long-term growth in the future. But on the other hand, there's a lot of partnerships happening early stage in clinical development. So a lot, especially in sRNA space, like most of the deals that happened is before, I think, IND or before clinical phase. So I think we're really working and very keen on establishing new partnerships with global MNCs and biotechs.
I want to get your thoughts, too, on where you see the longer-term trends, specifically on regulatory pricing, for example, and whether or not that is, I guess, in some ways influencing where you want to position the company to be in a few years' time.
Yeah, so actually 2026 marks the first year of our new 10-year goal. And this year, our new 10-year goal is focused on globalization. As you said, the pricing is limited in China, so Chinese pharmaceutical companies really need to look outside, look into the global markets, and establish more presence there to, I think, really have the full potential of every drug and really to bring new treatments to global patients. So I think, yes, this is very important.
Yeah, tell us more about that, if you could. I mean, much of Sino Biopharma's revenue does come domestically in China now. In terms of overseas expansion, are there particular geographies that you're looking at right now?
Yeah, so right now for our innovative portfolio, we're definitely looking for partnerships with bigger MNCs and global biotech companies. But with our biosimilar portfolio and our generics portfolio, we're looking at Southeast Asia, South America, Europe, and just the whole Asia area. And we've currently, I think we've signed with more than 30 overseas partners already in smaller countries. Yeah, so we're really working on that.
Theresa, just very quickly, there's a lot of attention on the entire sector. There's a lot of innovation taking place. And I wonder, do you think there is a lot more innovation that's taking place in the last 12 months, or is it because the world is looking closer at it?
I think both, definitely both. Because I guess currently after the whole hype before 2021, I think now a lot of only the companies with very high quality, global standards survived until now. So now definitely in China, the current existing companies are of very high quality.
Theresa, we got to leave it there, but thank you so much. Theresa Zay there, chairwoman at Sino Biopharmaceutical. We have the export numbers and import numbers from China coming through for trade in December. Looks like they did actually beat estimates here for December. 6.6% upside there for exports for December, beating estimates. This is Bloomberg. Just want to recap that trade data that we got out of China in the last couple of minutes or so. But yeah, it was actually a pretty strong set of numbers here. 6.6% in terms of exports for December. The estimate was for a 3.1% print. So more than doubling in some ways here. Imports were also strong, 5.7% as well. So it really kind of leaves that trade surplus at around, 114 billion right now. So certainly there's a lot of talk of, when exports are going to start to slow down for 2026. When you take a look at December, it still looked like it ended the year on a pretty strong note.
Where was the payback from the front loading?
Didn't see it all year.
Not very clear.
Yeah.
But yeah, so we're going to get more context, of course, from the ongoing briefing taking place right now, which I guess so this is a really good jumping off point for the global conversations we'll have around trade this year. Certainly the China outflows into the world in terms of shipments, EVs, yesterday we talked about pricing as far as EVs goes. There's a currency angle. It's a stronger currency, really counter to the stronger trend of really more competitive shipments coming out of China. Again, it opens up the door to even, let's call it even foreign policy, right? And that segues very nicely into the Japanese close and the lunch break. 1.6%, where there are, of course, lots of things happening on the ground. We'll get to that in a moment. But the Nikkei is better by 1.6. The topic is 1% to the upside. The real story, though, is really the Japanese yen, which, 160. This should be now the weakest against the yen, against the US dollar, going back to 2023, I believe. And, of course, this melt up in the JGB space. It's the longest losing streak as far as long-dated JGBs are concerned, going back to 2024. Given the move up today, this should be now, I believe, 8 straight days now. We've only gained 1 day, and that was the first day of the year. Since then, we've seen declines across the JGB space. Right. Prime Minister Takaichi is also pushing for closer economic and security ties with South Korea after hosting talks with the president, Lee Jae-myung. That's as she seeks to contain diplomatic and trade tensions with China. Let's get more from our Japan politics and economics reporter Sakura Murakami in Tokyo for us. Let's start with the meeting. The key takeaways there.
Yeah, so Prime Minister Takaichi is really seeking to sort of contain the diplomatic fallout that Japan is experiencing with China right now by also kind of bringing Korea closer into its orbit, I guess. She did mention yesterday that Prime Minister Takaichi and also President Lee had very deep discussions about supply chain cooperation. She didn't elaborate on what that cooperation might look like, but I think that's quite a hint on where Japan is seeking cooperation with Korea. President Lee, on the other hand, is sort of trying to strike a bit of a balanced tone in that respect. He said he is not going to wade into this issue between Japan and China at the moment, and that seeking kind of common interests, seeking cooperation on areas that there can be cooperation is important trilaterally with China, not just between Japan and South Korea.
And there's just so much speculation, anticipation of this early snap election that she might announce later on today. Tell us a bit more about the timing of this and really what she's trying to achieve.
So this is on the backdrop of these diplomatic tensions that are playing out with China. And a big part of it, the broader story about it, is basically Prime Minister Takaichi trying to solidify her power in Japan. At the moment, the LDP, the ruling party, LDP, doesn't have a strong majority in either chambers of parliament. They have a razor-thin majority of 233 seats in the lower house, but if Takaichi can bank on her personal popularity to call a snap election and win more votes for the LDP, that would give her kind of the power and strength she needs to push forward her policies domestically and also have kind of a stronger stand on the diplomatic scene as well. So these are all factors that are playing into her decision, and we can probably expect more on that later today and also next week when Parliament is called into session.
Sakura, thank you. Sakura Murakami there, our Japan politics and economics reporter joining us out of Tokyo. Meanwhile, we're talking about South Korean prosecutors. They're now seeking the death penalty for former President Yoon Suk-yeol over his botched 2024 declaration of martial law. A verdict is expected next month, with Yoon facing the prospect of either a death sentence or life in prison. Yoon was indicted last year on charges of insurrection after he shocked the nation and the world by briefly suspending civilian rule. Prosecutors in Taiwan are stepping up efforts to block China's tech players from recruiting the island's talent. They've issued an arrest warrant for Pete Lau, the CEO of Chinese smartphone company OnePlus, and indicted 2 Taiwanese citizens who worked for him. OnePlus is suspected of illegally recruiting more than 70 engineers in Taiwan.
Now, we're live from the UBS Greater China Conference in Shanghai. Next, that's when we'll hear exclusively from the bank's global banking co-head of M&A for the Asia Pacific, Samson Lo, will be joining us to talk us through the deal's outlook this year. This is Bloomberg. Yeah, there's really been this very consistent, slow melt-up in Chinese equities this year. I think we've been sort of jumping between the offshore and onshore markets, and I think one day, I think it was yesterday when we had the offshore markets moving to the upside. Yeah. The day before it was the onshore market. Today it's the onshore, as you can see. CSI 300, IT index 3% to the upside.
Yeah, it's still really the hardware space, as you say, but tech is still very much the flavor of the day. And
you know who we need to talk to?
Who?
Wendy Liu.
Oh, yeah.
What's her call?
I think she's coming next week.
Oh, she is? Okay.
Basically, CSI 300 might not outperform as much as MSCI China until March.
Okay,
she
that's
says,
the call. Okay.
Just on valuations and the like, but she does favor small caps over the large caps here, just given what we've been seeing in this whole rotation side of things. So certainly Fantastic. A lot to ask her when she comes on. But we've heard from Goldman, we've heard from Laura Wang from Morgan Stanley, and now JP Morgan has chimed in on this rally overall, all of which are looking much more positively around, of course, this market. And certainly there's going to be a lot of talk about, what's driving all of this, right? When you start to see the earnings side of things, as we said, is the playbook really changing? Are things really broadening out? And the renminbi certainly is going to be a key factor in all this as well. And whether we continue to see this strength, right? We just had Barclays yesterday's Lemon Zhang say, look, they're on consensus. They still think renminbi could sit at 725 for this year, while others are thinking, 6.8? Or the like here. So that's quite a non-consensus call. Non-consensus.
Yeah.
Say that 10 times.
Okay. No, but it's interesting there because I think one of the questions you asked her was, does a weaker Chinese currency mean a weaker equity market, right? And she made a distinction between what's happening in Hong Kong as far as the offshore market is concerned, where really a lot of the deals have taken place, out of the IPO market, right? So I'm really curious to see what the deals outlook looks like onshore when people talk about it's the year for the Asia market this year. You know what? I think we have a guest going to talk about that. We'll take it straight back now to the UBS Greater China Conference in Shanghai, where our own Stephen Engel is with someone who can talk us through the deals outlook. Steve.
Yeah, absolutely, Dave. We're here with Samson Lo, UBS Global Banking co-head of M&A Asia Pacific. So we were just talking, we were sitting in this exact same spot, same table, same booth, exactly a year ago, where you predicted there was going to be a resumption, sort of a boom in cross-border M&A involving Chinese companies. I think the numbers actually surpassed what your bullish estimate. So Give us a little bit of a recap of 2025. It was 39% up in M&A volume in Greater China. Year over year to $577 billion. Give me a little bit of a recap of what surprised you there and what's going to be the outlook for this year.
Okay, great. First of all, thank you for having me here. And that was exactly 1 year ago when we spoke about my estimate for the year, and I was expecting up about 20 to 25%, and turns out it was 39%, way better than what I have expected. So the year last year was a very interesting year in terms of the areas and the pockets of growth from China M&A and more broadly APAC M&A. For example, more broadly in APAC M&A, it was mostly driven by Japan. We have seen quite a number of large cap transactions. For example, the attempt by Couche-Tard to acquire 7 & I Holdings, and the restructuring around Toyota Industries. And we zoom into China, right? It was driven by a few very large cap Ministry of Finance capital injections into several financial institutions in China, and also continue to be some domestic restructuring. But what is most interesting and what is driving a lot of the M&A volume and also the headline news is from China private equity firms. We have seen in a few cases some of these China private equity firms being very active in European consumer assets. For example, in the likes of Hongshan Capital acquiring Marshalls, and also just before Christmas, Golden Goose. And we have also seen some of the China private equity firms continue to drive China domestic M&A in the likes of all these China carve-outs and multinationals such as Starbucks China, McDonald's China, and there are currently still a number of China carve-out from all these multinationals from Europe or from America.
Yeah, we'll talk about the go abroad, but also sort of the rationalization of foreign businesses in China. We're seeing a lot of deal flow there. Diageo is the latest one looking to possibly offload its, was it Sichuan Swell Fund? I know UBS is possibly involved in that, so we won't go deeply into that. But you mentioned Starbucks. In November, Starbucks agreed to sell a majority stake to private equity firm Boyu Capital. You have Restaurant Brands International made a similar move with its Burger King chain. GE Healthcare Technologies also looking. So is that going to be a major trend too, as international brands and companies look to sort of maybe downsize their exposure to the Chinese economy, given all the different pressures?
Yeah. First of all, this what we call like China carve-out from the multinational. This trend actually has been going on for quite some time. Actually, even we dated back to COVID times, there was a Mick Johnson offloading the China infant formula business to Primavera. So it actually has started back then. And to be honest, some of the transactions that have just been announced, Starbucks, Burger King, it has been in the market for quite some time too. And the drivers behind the multinational decision making, it's manifold. It could be pure monetization of the China business. It could be because of the competitiveness of some of these assets in China.
It's hyper-competitive.
Hyper-competitive.
Across every sector.
And if you look at some of these assets, they are mostly consumer, retail related, and also part of it has also to do with China consumption growth in the last couple of years, and making the competitive landscape even more competitive than before. And of course, there is also a little bit of maybe a preemption of certain regulatory changes that the multinationals or the Chinese government were expecting. But those are, I would say, not as strong of a driver as consumption growth and also competition in China.
Is this going to accelerate in 2026, though?
It will continue to, I would say that, not accelerate, but because some of these assets, they have been in the market for quite some time, this may be the year where some of them will finally come to a conclusion. And partially is because the valuation of the overall market, for example, the Asian market, the Hong Kong market, they have been going quite strong. So it's easier to pack it to a higher benchmark index than before. And also the interest rate environment, especially for some of these larger cap transactions, the lending environment now is more constructive in doing something together. That's why you will see some of these deals, what I would actually call old deals, but they will be coming to conclusion this year.
How about going abroad? I mean, you're having a strengthening renminbi, which also helps to purchase abroad. We also have that data. There was a great Bloomberg story a couple of days ago about where China in 2025, essentially the deal flows cross-border to the rest of the world, they actually surpassed, Chinese combined companies surpassed that of the United States investing into other countries for the first time, accounting for about 10%. How much is that trend going to continue? You have a slightly appreciating renminbi, you have strategic purchases and building of EV factories in Europe, battery factories and other plants. So what is going to be the overall trend this year for that?
It would certainly be a big year for China outbound, but mostly driven by the China private equity firms because it's still easier. They have offshore funding capability, and also a lot of the transactions that they do is interest rate driven. So we will continue to see a lot of that, and the areas of interest will continue to be in large, high-profile European consumer names. Yeah, for example, we have already seen, like in the case of Marshall, Golden Goose, and likewise, there are more consumer and fashion brands where they already have an establishment or foothold in China that, with the help of the China private equity funds, they will continue to grow in the China markets, and also extending to industrial sector, mostly in the I would say on the automation side or in upgrades. Like for example, yeah, you mentioned about like a lot of the Chinese EV guys looking to build more plants or EV plants in Europe and also in the US. And lastly is also in the healthcare sector. And in the healthcare sector, we have already seen it. Last year, there were a number of, I would say, licensing deal of China pharmaceutical company forming collaborations with a European or US counterpart.
What's the biggest risk? Geopolitics and protectionism in overseas markets is going to be always there. But there's also the risk, because right now there's a lot of investment into Chinese AI and AI in general, but there could be a capex or even a stock market bubble burst. What are the biggest risks to any kind of projections going forward?
The biggest risk remains around regulatory. Especially some of the transactions in the market, they were originated out of the regulatory needs. Maybe it's a foreign business that was acquired that needed to be carved out. However, if it's originated out of regulatory needs, it could be going through lots and lots of volatility throughout the due process. For example, whenever there is a change of regulation or maybe there's a change of a political stance, then those transactions, the regulatory approval process could become very lengthy. And at the same time, because there is a bit of, I would say, over-optimism in the market now, driven largely by the stock market performances. But when there is an adjustment in the stock markets, some of the optimism may go away. And so that affects CEO and principals' confidence in doing outbound M&A.
Well, you mentioned Japan. There was a record amount of M&A in Japan in 2025. Is that trend going to continue?
Absolutely. There's still a large number of Japan-listed companies, and Japan itself, right? They are more welcoming to foreign investment. Even private equity firms attempt to. So that will continue. And at the same time, Japan continues to be a hunting ground for activist hedge funds.
Very quickly, what is your crystal ball for the Greater China M&A volume? Is it going to be 39% again?
It would not be 39%. However, I'm still very optimistic it will grow another 20%. Now, this is actually a very interesting trend because if we look at the last two record years, one being in 2021, right after COVID, and 2015, the height of China outbound, the year after that actually went down by about 20%. But however, in this case, I actually would expect it continue to go up by another 20%.
Okay, we're going to hold you to that. We're going to be right here next year and see how you did.
Yes.
Samson, thanks so much for your time.
Thank you so much.
Great to see you again. All right, back to you guys. We'll be back in the next hour from the Greater China Conference of UBS here in Shanghai.
All right, day two. Thank you, Steve. And of course, our thanks to Samson Lo, co-head of M&A for APAC for UBS as well. In terms of movers we're watching very closely is the tech space once again driving a lot of the gains here. And Kuaishou is certainly one of them. We're up some 6% here right now. The company reported December revenue actually beating estimates thanks to Kling. Of course, strong performance for its AI model, according to Citi as well, so pointing to some solid revenue outlook for this year. We're also looking at tin stocks, given just the record that we've seen when it comes to the metal space, and tin certainly did reach that record there. There you go. We are seeing that rally underway for some of the tin miners or
related stocks across Southeast Asia too. I was always joking, the favorite musical genre among investors this year has been non-heavy metals. When you look at what's happening there in that space, the tin's following basically the rally we're seeing across almost the entire industrial metal space. Hanwha is in Korea. The shares are halted. There's a notice that's been an announcement here. So the company is looking to spin off split effectively, and more details, of course, are coming here on the company itself. But yes, the bottom of your screens will tell you everything you need to know about this corporate pronouncement coming through. Right, plenty more ahead. This is Bloomberg.
My strategy is basically to filter through the 90% of the market that makes up 10% of the market value at the bottom end of the market, ignore the top 400 stocks and look at the other 1,800 and try to find 30 or 40 which are worth holding for the long term. And it's like walking around a second-hand car lot where you have no warranties. But if you're an expert mechanic, you can spot the ones that they're all trading at a discount for that risk, but the ones which have been well maintained. And not only that, in Hong Kong, you usually have to get in the back seat because the controlling shareholder is driving the car still. So you want a safe driver as well.
The expert mechanic himself, that was David Webb speaking with us back in 2019. And tributes are flowing today for the Hong Kong activist investor who has died at the age of 60 after a long battle with cancer.
Richard Frost, our senior editor, is with us right now for a look at Webb's life, his legacy, and his philosophy behind his investing, which I think a lot of people will remember him for. Talk to us about that.
Yeah, I mean, it's important to remember he was a fantastically successful investor. He estimated he had annualized gains of 20% over a 25-year period. That made him very wealthy. And as he just explained in that clip, a lot of that came down to him being able to root out bargains in what he saw was a kind of slightly rigged market due to a lack of decent corporate governance and a regulatory framework. And at the same time, there was this drive in him to try and level that playing field so that people who didn't spend until 2 a.m. every day working hard to do that could also benefit.
And we say he was one of the more vocal sort of activist investors here in the city. It made him a bit more of like a celebrity in some ways. You covered this whole sort of enigma network that he sort of unveiled a few years back. How successful was he, you think, in really cleaning up the corporate landscape?
I think he did certainly more than anyone else to shine that light on these darker parts of the corporate landscape. And that case in particular, where he connected 50 different companies and said there was sort of, hidden shareholdings and everything else under this report saying you shouldn't own these stocks. The shares collapsed soon after, and that triggered the biggest ever investigation by the securities regulator. I mean, what he sort of heightened, I think, attention around areas where there needed to be some sort of improvement, whether it's scrutiny from the government or something else. And last year, when he had this farewell fireside chat, which is a sort of awake while he was still alive, he did say that, the activist part of his life was what he preferred to the investing thing. And he would die a happy man knowing that he tried his best to clean up that landscape. So I think, the fact that he felt he'd done enough shows the kind of impact.
Richard Frost there on just really among the many things that the investor community, among others, of course, a broader community, of course, will remember David Webb for as well. So that's it from us here on the China Show today. We have lots more on the way here on Bloomberg Television. We will see you all tomorrow. That's it from us, though. So stay here on Bloomberg Television.